Well, howdy there, folks, and welcome into today's video. Hope you guys are doing great out there. As always, I have some information to share with you here today in regards to the stock market, okay? And some folks would say some of this is going to be good information I'm going to share with you today, and some people would say this is bad news, okay? Or good news and bad news. And as far as me in the stock market, I try not to look at things as far as like, this is good news, this is bad news. I just say, this is the information that is presented, and how do I make changes to my portfolio or to my stocks or things like that based upon some of these things. And there's going to be some things I'm going to show you here that you're going to be able to identify and say, well, this is where real opportunities are in the market right now. There's going to be other things I'm going to show you in this video where you're going to say, okay, the opportunities in the market probably aren't over there, so maybe I need to go over here. And so we're going to go through a lot of data, a lot of information that I'm going to share with you here today, and a lot of perspective on how I view this as somebody who's been in the market for a long, long time now. So hope you guys enjoy this video. All I ask in return is that you smash that like button, that thumbs up button down there. That helps out huge in the YouTube algorithm. I appreciate all you guys for being here. As always, much love, and I hope you get a lot of value out of a video like this, and you remember a video like this for a long time to go in the future, because some of the things I'm going to show you here today are going to be valuable things you're going to be able to think about in the future here, okay? So very, very important, and in the present, very, very important, okay? We got a brand new Facebook group. If you want to join that, check out pinned comment down there. It's absolutely free to do so. Hope you guys really enjoy that. Everybody seems to like it, that have joined it so far. So hope you guys enjoy that. It'll be down there, okay? So where I want to start out here in this video here today is what we're looking at here is essentially S&P 400 mid caps. This is looking at forward PEs for the mid caps in general, okay? And so we're going to get some really good news to start here, okay? First thing is, if you're looking at mid caps, we're about 18. So we're up, I drew a line across here. So we're up at upper ranges, kind of up here, right? But we're not at what I would call obnoxiously high levels like we've been in the past, right? When you talk about levels like that, we're talking that's territory you haven't seen in a long, long time, right? To get up here, you have to go back to the tech bubble days, right? Over here, you basically just have to go back to like around 2017, 2016. And so right off the bat, this shows me how I think about something like this is there's some opportunity likely in mid caps. So if I'm thinking about where I'm going to likely find a deal in the market or where I should be researching, I'm likely going to look at mid-cap stocks. Now, most folks would consider mid-cap stocks kind of being anywhere from like a $10 billion market cap to maybe even like a $70, $80 billion market cap, right? Most folks consider large caps being anything over $100 billion. And when you get into small caps, you're really talking under $10 billion and even under $5 billion, okay? And so if I'm thinking about where I would like to start my research work, I'm usually going to want to start it with maybe mid-caps potentially, right? There's actually some opportunity in that, okay? Now, even more opportunity is actually in the S&P 600 small caps. Now we're getting some real good news. S&P 600 small caps are at 17.84 P. Now look at this. We're talking about, as far as this range, it's actually even much below. We've been higher than this in 2018. We've been higher than this range in 2017. We've been higher than this range in 2016. We've been higher than this range in 2015 and 2014 and 2009 and 2010, okay? So if I'm thinking about where my real opportunities are in the market for me looking at stocks, researching stocks, and potentially investing in stocks, there's no doubt there's opportunity in mid caps and small caps. And so if I'm going to research companies or if I'm going to likely invest in companies, probably going to be mid caps and small caps. The large caps might not be the opportunity right now, and we'll see something. I'm going to show you some things in just a moment around large caps, okay? So right now we're focused on good news. Good news is we're not at obnoxiously high ranges like we've been in the past. Small caps and mid caps are looking much more attractive than they've been in the past. And by the way, forward P is basically just looking at the next, 4 quarters of earnings versus where that stock price is at. It's one of the most important metrics I think you can ever look at in terms of judging a stock or in terms of judging the stock market in general. I think forward P is to me, it's the most important. I like price to sales ratio. I like trailing 12-month PE. I just like forward P more, okay? It's my favorite metric in the stock market by a mile. And this is some good news to start out here. We want more good news? Well, market's down today. Look at this. Dow's down about 268 points as of right now. The Russell's down 1.62%. So Russell, whenever you see the Russell, think about small cap stocks. And so those numbers I showed you there were from Friday. right? Market was closed Saturday, market was closed Sunday, market was closed yesterday on Monday because of basically celebrating 4th of July, right? It's just like a national holiday, right? And so now that those numbers I just showed you, the mid caps and smalls, are even actually likely going to be even a little bit lower, which makes them even a little more attractive. And so this is also some more good news that those valuations on those smalls and mids are likely even more attractive. Now, I've got more good news for you, okay? If I'm thinking about stocks in general, if I'm thinking about the health of the stock market, I want to see companies beating their earnings. I want to see companies raising their guidance. If I own a stock in the stock market, I want to own a company that's beating their earnings and raising their guidance. Very, very important. Look at this at a fact set, okay? Earnings growth for Q2 2021, the estimated earnings growth rate for the S&P 500 is 63.6%. That would be the highest year-over-year earnings growth rate reported by the index since Q4 of 2009. We're talking like 12 years ago. This is more good news. A healthy stock market is a stock market where companies are beating their earnings and even potentially raising guidance. Earnings guidance for Q2 2021, 37 S&P 500 companies issued negative EPS guidance. 66 companies basically had positive or raised their EPS guidance, right? If 66 is a final number, it'll be the highest number of S&P 500 companies issuing positive EPS guidance since FactSet began tracking in 2006. Okay? This shows you that we are in an extremely healthy market in terms of underlying earnings of companies, right? We started out here looking at valuations. Valuations are looking much more attractive on small caps and mid caps than they have been previously, right? Much more healthy levels for valuation. And the underlying businesses are doing very well, which is very, very, very important. I want to see companies beating earnings. I want to see companies having positive guidance and maybe even raising that guidance. That makes me feel like I'm in a very, very healthy market overall, okay? And then when I get economic backdrop numbers that also show, hirings there and those sorts of things, right? And capital's free, then that obviously is even better news. And when you went through a once in 100-year health event that hopefully won't come for another 100 years, that is also more good news, right? So we have a lot of positive things, but it does not end there. Look at this. This is actually from the previous quarter. 80% of S&P 500 companies beat Wall Street fourth quarter earnings estimates. That's important, guys. So basically what this is telling you is companies are absolutely destroying and killing their earnings, which is great news. This is what I want to see. If it's stocks I own, I want to see them destroy their earnings, destroy their guidance. And in the market in general, that is the facts right now. Look at that. 80% beat earnings, and then this past quarter, companies killed it again, okay? And so, there's some very, very positive things. And I have more positive news to share with you. And then we got to get into some worrisome news that I will share with you as well in regards to certain stocks, okay? More positive news. There's two huge industry sectors, whatever you want to call it, that have been absolutely decimated for the past 18 months. And the earnings have been straight trash. And these are huge industry sectors that help drive the stock market. And these have been awful for the past 18 months, the past pretty much 6 quarters. And in a snap of the fingers, these exact same companies that have been hurting so bad are about to see their profitability go up in a massive way, their revenues go up in a massive way, and overall confidence around these businesses go up in a massive way, literally in a snap of a fingers, okay? The first one up here is the travel industry, okay? In the travel industry, no industry out there pretty much that I can think of was hurt worse than the travel industry. I mean, when you have global travel get shut down to pretty much, a screeching halt overnight, that devastated any company in relation to the travel sector, airlines, hotels, resorts, even companies that are indirect beneficiaries of it, but you could almost consider them direct beneficiaries of travel. Think about Uber. Think about Lyft. Even companies like that have just had their businesses devastated, and now virtually overnight, those horrible earnings and those horrible company, situations there are turning to positivity, right? I live in Las Vegas, Nevada. And if you don't know, Las Vegas, Nevada is one of the biggest, if not the biggest, travel destination in all of the world, right? And think about it from this context. I've been down to the Strip the past 2 weekends. I've lived in Vegas since 2015. I've never seen it as crazy epic on the Strip as it was the past 2 weekends in my life. I think Vegas is going to put up the biggest, possibly June and July ever in Vegas's history in terms of gaming revenues and all sorts of things. And the convention business is coming back, right? And from my understanding, travel destinations in general are just starting to book up and are getting busier and busier and busier. Like, most folks now have gotten their Rona shots. Everybody's starting to think, I haven't traveled in a long time. It's time for me to start going places again. Let's go plan a trip, with their friends and family and things like that. And this is all starting to play out now and is going to continue to play out for the next, in my opinion, at least the next year or two. And it's happened in literally a snap of fingers where these companies have been just reporting awful numbers to literally overnight, all of a sudden, all these companies are going to be reporting some of the best numbers they've likely ever reported. And it's going to happen that dang fast. Now, think about this for a moment, okay? If all of a sudden you're talking about the airlines getting busy again, think about all the fuel they use. If you're thinking about people driving to travel destinations, right? Remember I talked about my city, Vegas? We get a huge amount of traffic recently from California and from Arizona, Utah, places like that, right? And, a lot of folks driving, if everybody's all of a sudden driving to take trips, guess what? You're using gasoline. And so what is likely starting to benefit in a massive way, and you're seeing in the numbers already, that is a huge industry, huge sector in the stock market, the energy sector. The energy sector is one of the biggest in the stock market. And if you look at what's going on with oil prices, okay, that's all I'm going to say about that. Oil prices have been going up, and don't be surprised if those oil prices continue to go up for the next several months. And all this is going to be a boom for the energy sector as well. And so these energy companies that have been getting devastated, a lot of them could turn to be very, very positive and actually help the market in general, okay? This is very, very important to keep in mind. And don't, on the flip side, the bad side, don't be surprised if gas prices continue to rise in whatever city you live in, okay? Now, if you drive Teslas, good for you, okay? But most people don't drive Teslas yet or electric cars in general. So for right now, don't be surprised if those gas prices go up. I know here in Vegas, I've been seeing a lot of $3.50, $3.70 a gallon. I would not be surprised if at some point here in Vegas, we're over $4 a gallon. And from my understanding, California could potentially reach some record pricing potentially this summer as well. And in a lot of parts of the country, don't be surprised if you see gas prices that are more expensive than you've ever really seen. There's a lot of talk that OPEC might continue to cut production. The OPEC's been not in the best place. Obviously, they've been in a position of weakness for the past 18 months. And literally in the overnight for OPEC, they're in a position of power. And so they're likely going to continue to maybe limit supply out there, right? And if you have a crazy amount of demand, boy, you're looking in a good situation. So the energy sector going to likely bounce back in a big, big way. And those earnings are going to come and be very, very healthy, right? Now, that's a lot of good news for the stock market. There's a lot of good news I just shared with you in regards to the stock market. There's some bad news, and there's some stocks I am a little worried about here. Some very, very important stocks, mind you, okay? And some of these stocks drive the entire stock market because they're so big. And one of these stocks right off the bat here is a stock I am directly invested in. I probably have, $300,000, maybe even more than that in this particular stock. And it is Facebook. Facebook and Google, I worry about these stocks. Let me explain. So in terms of Facebook and Google, let me be very clear. Long term, I'm not worried at all about these companies. Short term, I am. Here's why. Last 18 months, what did you have? Everybody stuck at home, everybody forced to be home. And if you're forced to be at home, then you're likely going to be in front of your devices. Your phone, your computer screen, your tablet, all those sorts of things. You can't go anywhere. There's no events going on. School was, pretty much canceled. All those sorts of things, right? And so everybody's forced to be home for, almost 18 months straight. And so Facebook is going to thrive off that, right? There's going to be way more people using Facebook and using Instagram, which Facebook owns, WhatsApp, things like that, right? Everybody just has more time. They're going to consume more content. They're going to use a platform more often. Boom, boom, boom. Very, very good thing for Facebook. Google, same exact situation, right? Everybody's at home. Well, Google search is probably going to be even more popular. Google owns YouTube. YouTube's arguably the biggest driver for Google's business nowadays, right? Especially in terms of growth. I know a lot of YouTubers, and I don't know one YouTuber right now that is happy with where their views are now versus where they were a year ago. A year ago, everybody was at home watching YouTube constantly, right? And now the world's opened back up. There's not as many viewers on YouTube. And so every pretty much YouTube creator I know is complaining about, views being down. And if views are down, that's not good news for Google. Because guess what? Google makes more money when YouTube shows a bunch more ads, right? And when, there's a competition for the pricing of those ads, that obviously benefits YouTube in a massive way, which benefits Google in a direct way, right? And so I don't, as far as these companies, everybody's gotten very, very used to Facebook and Google blowing their earnings away, right? Reporting these ridiculous numbers that just are like that's crazy. Well, I'm not so sure these companies are going to blow away their earnings for the next several quarters, because you have the fact that the world's opened back up and you're not forced to be at home constantly now, right? And so that was just a huge short-term boost to companies like this. And now it's kind of being taken away, and these are getting to more normalized levels. Normal levels now. Normal levels of Facebook activity, and Instagram activity, and Google activity, and YouTube activity, and all these other things that have benefited, right? Discord, anything out there, right? All those things are getting to more normalized levels now. And so in the short term, these stocks are, as far as the crazy beats on earnings, I don't know if we'll see it, to be completely honest. Now, on the flip side, the good news for Facebook and Google is they don't trade at ridiculous valuations. Facebook trades at a forward P under 30. Google usually trades at a forward P of 28 to 31. So it's not like we're talking about some sort of crazy valuations on these stocks where it's like, oh my gosh, these stocks are ready to tank 50% or something like that. I just look at these stocks and I wonder, I do worry a little bit that they're going to definitely underperform a lot of mid caps and small caps. That's like the way I'm looking at it. I don't think they're the best opportunities in the market. You know who else benefited huge last year? And oh boy, they're going to have some ridiculous comps to comp against now. Netflix. Think about it. I mean, if you ever considered getting Netflix and you hadn't gotten Netflix, last year was the year you got Netflix, right? Everybody's at home. There's nothing to do. You can't go anywhere. You can't get any entertainment. So guess what? Hey, I've always thought about getting Netflix. I never got it. You got it last year. And so what I think is going to transpire now, essentially, is actually not a situation where Netflix necessarily has a bunch of people fleeing the platform, although that could happen. Some folks maybe are going to be like, I don't know, use Netflix. It's like $15 a month or whatever. Let me cancel. That's not really the big problem. The big problem I see for Netflix is they have a huge valuation, and I think the growth rates they're going to show around new users are going to be very troublesome. And it's going to happen overnight, right? Because all of a sudden, everybody has pretty much signed up for Netflix, especially in a lot of the developed countries that want to be on Netflix. Everybody's just had to consider that over the past year or 12 to 18 months, right? And so now Netflix is not in a position of power. They're going from a position of power to a position of weakness almost overnight. In those ridiculous numbers they were putting up, woo-wee, those are going to be tough numbers to hit now, okay? So that's another stock I worry about. And Netflix, keep in mind, this is now a multi-$100 billion company. We're not talking about this as some small market cap, right? And it's like, no, Netflix could actually pull down a lot of other stocks in the NASDAQ in general, right? Netflix could, because that valuation is pushed up now. And the bigger and bigger weighting, the more you can directly actually impact other stock prices, okay? Very, very important to think about there, right? Now, also, some more troublesome stuff. Look at the forward P ratios for the S&P 500 large caps, 21.6. We're in uncharted waters. We other than the past few quarters, we've never been at levels like this. I mean, you go back up the past 15 years, you don't find the large caps trading at valuations like this. This tells me essentially that if I'm looking for deals in the market, I don't even want to think about large caps. It's like finding a needle in a haystack as far as finding a good deal in large caps. Mid caps and small caps, I'm going to be able to find some good deals there. Large caps, dream on. They're just not good deals. And the other part is a lot of them have benefited so much by what has transpired over the past 18 months, 16 to 18 months. And a lot of those companies that had these huge tailwinds behind them are now going to have headwinds for their earnings. And that's going to be a huge switch up. And this could be something that actually potentially maybe even hurts the market a little bit. but I'm not as worried about mid caps and small caps in this hill scenario. I don't think it's a time period in which it's just buy FAANG stocks and those are the best deals and you're outperforming the stock market. I don't look at that at all. I mean, if we think about, like we talked about when it comes to Facebook, right? Facebook, hey, when everybody's at home, forced to be in front of their devices, Facebook's going to thrive in that environment, right? Think about Apple for a moment. Well, everybody all of a sudden had to be home, work from home, all those things. Look at Apple's Mac numbers over the past year. The Mac business has been unreal, but now Apple has to comp against those ridiculous Mac numbers, and the Mac business is likely going to go from growth to, dare I say, shrink. In the short term. Long term might be fine. But in the short term, I would not be surprised at all if you see iPad business and the Mac business actually start shrinking year over year numbers over the next few quarters. And that's when all of a sudden people are going, whoa, and especially when Apple's valuation is pushed up to levels it hasn't been at recently, right? Amazon obviously is a beast, but now you can go to stores again. A lot of folks last year, over the past 16, 18 months, felt like they were forced to order things on Amazon. Now you're not. Amazon's going to continue to be a beast, as most of these companies will continue to be a beast over the long term. But there's no doubt when you look at the comp numbers year over year, which is something big Wall Street looks at, these numbers are stiff. Think about Netflix. We talked about that one, in Google. So I don't think it's just as easy as buy FAANG stocks and you make a bunch of money in the market or outperform the market. It's not like that right now, okay? I am optimistic about the stock market in general, but specifically around mid caps and small caps. I cannot say I'm overly optimistic about large caps. Large caps, I'm like, a lot of those stocks I think are on shaky ground. Not that I think they're going to fall 40, 50%, but in terms of those stocks underperforming the mids and smalls, I expect a lot of those stocks to underperform the market and maybe go through a little period where they're just kind of, not doing much. Let's just put it that way. And if you look at where I've been, if you watch my channel all the time, by the way, shout me out if you watch the channels all the time in the comments section, okay? But think about the stocks I've been investing in heavily the past, several months. Well, Fubu's not really a heavy investment. I put 2 months ago, I think I put $9,000 in that or so, right? But Tattoo Chef, Corsair Gaming, this Fobo, and Voyager, what do they all have in common? Small caps. They're all under $5 billion market caps. I'm putting my money where my mouth is. That's where I see opportunities. I don't necessarily see huge opportunities in FAANG stocks right now, which is why you don't see me out there loading up on Facebook and Apple and Google and Netflix and all those stocks, because I see better opportunities in the market for my money, and it's not even close, okay? And so, yeah, that's what I see in the market. I'm optimistic, but mainly around mids and smalls. Large caps, I'm a little like, okay? Hope you guys enjoyed this video. As always, if you're looking to level up your investing game, you want to know more about how to value companies, look into companies, everything like that, you're looking to be part of the private Discord chat, check out pinned comment down there. We also have our free Facebook group down there as well. Much love as always, guys, and have a great day.